Well, good evening and welcome back to Rainbow Investing, where we examine a spectrum of ideas to increase your long-term wealth. Now, this evening I want to talk about investment apps, because these are quite a new fad at the moment. Now, they've been around for a couple of years now, and they're actually proving quite a popular way that young people in particular are starting to invest or getting into investing. And they're quite successful because they make it really easy for everyday people to invest small amounts of money at a time and actually put it away, and it's working to generate you more money over the long run. So in a way, it's making investing really accessible for millennials. So it's a really interesting phenomenon, and I'm going to dig deep into two investment apps that are really popular in Australia. So the first one is Raise, and it used to be called Acorns, but they changed the name about 6 months ago. And the second one is Spaceship, which started a bit later than Raise has, but it's also quite a popular app. So these two apps are both really widely available. You can get them on the App Store, on the Google Store. They work with Android, they work with iPhone. They'll really easily sync up to your bank account. So they're really, really easy to use and they're really accessible. All right, so let's get right into it. So we'll start with Raise. So Raise has actually been around for a while and actually started in America under the name Acorns. So what they did is Acorns brought their app to Australia, and then they've sort of made it into their own Australian version and they've called it Raise. So Raise is sort of the original investment app. So let's get into how it works. So with Raise, there are 6 options you can choose from, plus another one that's called Emerald, which works in a slightly different way. We'll talk about that later. But these options range from conservative to aggressive, so you can sort of choose the style you want to go for. Their default one is a balanced portfolio, so if you join Raise, you'll be put into that one, but then you can change it later, and you can change it anytime you like. So it's quite convenient in that way, based on the exposure you want. So we'll talk more about this later in detail, but how it works is each of the options allocates your money in different proportions to various ETFs. So we've talked about ETFs before. They're most commonly known as a form of passive investing. So Raise has a bunch of ETFs from different asset classes. So that includes Australian shares, international shares, bonds, Asian shares, emerging markets, fixed interest, that means like money in a bank account basically, a really safe option. And depending on which portfolio allocation you choose, Raise allocates your money in proportion to that level of risk. So if you're going for the aggressive portfolio, obviously more of your money will be in shares and less in bonds and bank accounts. But if you go for the conservative option, obviously those two are flipped around. So both of these apps charge fees, obviously, for using them. That's how they make money. So with Raise, up to $5,000, you're charged $1.25 per month. And then after $5,000, you're charged 0.275% of the money you have in Raise. So basically up to $5,000, you're charged $15 a year. So that's obviously something to keep in mind if you want to go with Raise. So the last thing I want to say quickly about Raise is the most popular feature is something called roundups. So that's when you attach your bank account to your Raise account, and you can configure this, but every time you use your bank card, you can ask Raise to round up your purchase to the nearest $1 or $2 or $5, depending on how much you want to go with, and Raise will round up your purchase to that ceiling and invest the leftovers into the app. So the idea is you don't notice it happening. So for instance, if you round up to the nearest dollar, you get a coffee for $4.20, it will round it up to $5, so it'll charge your bank account $5 and invest that 80 cents into Raise. So a lot of people really like this feature because it makes saving really easy and you don't notice it. Alright, so I'll just take you over to my laptop and we'll go over the kind of things that Raise puts your money in, the kind of ETFs they invested in. Okay guys, so here we have the 7 ETFs that Raise invests in. So when you put your money in Raise, your money will go into one of these ETFs, or usually a bunch of them. So here we have the moderately aggressive portfolio. So you can see here that we have some target asset allocation. So if you're using the moderately aggressive portfolio, your money will be allocated in proportion to these percentages into these ETFs. So here we have Australian large cap stocks, so that's basically the top 200 companies in Australia. We have Asian large cap stocks, so that's the 50 top companies in Asia. We have European large cap stocks, US large cap stocks, so that's the S&P 500 that we've talked about before, so that's the 500 biggest companies in the US. We have Australian government bonds, so that's bonds issued by the Australian government. Australian corporate bonds, so that's bonds issued by large Australian corporations, and the Australian money market, so that's what I was talking about, money in bank accounts. So obviously, if you pick a more aggressive portfolio, your money will be less allocated into these defensive assets, such as bonds, and more allocated into these aggressive assets. Now, I also mentioned earlier that Raise has an Emerald portfolio. So this Emerald portfolio is more focused on ethical and sustainable investment options. So if we go up here, this is their product disclosure statement, by the way. It's on their website if you want to check it out. If we go up here, you can see that there's some other ETFs here. We have global large cap sustainability leaders. So you can read about that here. So climate leaders that invest in things like renewable energy. They avoid gambling, tobacco, armaments, that's guns, uranium, nuclear energy, that kind of thing. There's a whole list of companies they avoid here. And there's also an Australian responsible investing ETF. So if you go with the Emerald portfolio, your money will be invested in these ETFs. So this strategy also follows what's called a rebalancing strategy. So see with these target asset allocations here, Raise will periodically buy and sell the ETF units to maintain that percentage level. So in that way, you get to buy low, sell high. When one's doing really well, Raise will take the profits from it and invest in one that's not doing so well. And then it sort of rebalances according to this formula. So say the US market is going really, really well, as it has been doing over the last few years. That will mean this percentage here will rise over time. So say it rises to 10.9% rather than 8.9%. Raise will sell that 2% that it's gained and take the money. And then say if maybe Europe's been having a hard time, and because all the other assets in the portfolio might be rising and Europe might not be doing so well or falling, and it goes down to 4.4%, Raise will buy the Europe ETF and take it back to that 6.4 level. So there you have it, guys. This is how Raise invests your money if you choose to go with them. Okay, so that's all I want to say about Raise. So let's have a look at Spaceship now. So Spaceship's almost a direct competitor to Raise, and there's a few advantages and a few disadvantages that Spaceship has over Raise. So let's have a look. So with Spaceship, you only get two options to invest your money in, and they're both quite similar. So Spaceship has what they call their Spaceship portfolio. So they pick companies that they think are going to shape the future. That's their whole thing. So for instance, in the Spaceship portfolio, you'll have tech companies like Apple, Facebook, Afterpay Touch is in there. They basically choose a whole portfolio that they think are changing the world in some way, that are really exciting companies. And that really appeals to a lot of people. And they reevaluate this portfolio every month. So they have a look at every company in the portfolio, and if one company they think isn't going the way they want, they'll swap it for another one. So basically Spaceship has two portfolios, their Universe portfolio and their Index portfolio. So they're both quite similar in their approach. So basically the Index portfolio is 200 companies that Spaceship thinks are changing the world in a positive way. And the Universe portfolio is the top 100. So it's quite similar. Now here's what really sets Spaceship apart from Raise in my opinion. Using Spaceship is free until you have $5,000 in the account. So unlike Raise, which charged you $1.25 per month or $15 a year up to $5,000, up to $5,000 with Spaceship is completely free. So that's obviously a huge perk. So after $5,000, it's a fee of 0.05% for the Index portfolio and a fee of 0.1% for the Universe portfolio. Now if you compare them to Raise, it's actually quite a lot lower. So that's also something to keep in mind. So the last thing I want to say about Spaceship is they don't have the roundup feature that Raise has. So with Spaceship, you can only invest money in as a lump sum. Now you can set this up as a direct debit, so you can say every week it automatically takes $20 out of your account or $100 out of your account, but it doesn't have that feature that's linked to your bank card like Raise does. It doesn't have that roundup. So a lot of people really like this about Raise, and that's why they go with Raise. So that's also something to keep in mind when deciding between these two apps, if that's the way you want to go. Alright, so just like I did with Raise, I want to take you to my laptop and go through the Spaceship portfolio a bit, because it's actually one of the things I find more interesting about Spaceship. It doesn't just invest in ETFs like Raise does, they actually pick companies that they think are exciting. So let's jump over now. Alright guys, so I'm just at the Spaceship product disclosure statement. And you can see here, this is a generalized graph of how Spaceship allocates your money. So this is for both the Index portfolio and the Universe portfolio. So we can see here that 70 to 80% of Spaceship is going to be invested in overseas stock exchanges. So that basically means companies outside Australia. Now they've also got 15 to 25% of ASX listed companies. So that basically means Australian public companies that are traded on our stock exchange, and they have a 0 to 10% target range for cash. So that it just says over here that that is basically an allowance to efficiently manage the fund to minimize trading costs. So that means that they don't actually immediately have to sell one stock to buy another one. They can just take it from the cash pile. So if we go over to the Spaceship website, you can see here that it gives you a list of what you'll be investing in. So this is for the Spaceship Universe portfolio, so the 100 companies. You can see here that they've got some Australian companies, A2 Milk, Afterpay's there, but most of them are actually Americans. So we have Adobe, Adidas, Activision Blizzard, they make World of Warcraft. Alibaba's a Chinese company. We've got Google here, Amazon, Apple, and you can actually just go down the list and view some more. So Baidu's another Chinese one. Boeing, they make aeroplanes. So if you guys want to check that out a bit more in your own time, feel free. This is just on their website. So if you just go over to the Spaceship Index portfolio, it's very similar, except we'll be investing in 200 companies. So they've got a few more. AbbVie wasn't in the Universe portfolio. AGL, that's an Australian electricity seller. Altria, they make cigarettes. They own Marlboro. And it just goes down and down like that. AMP, everyone knows about AMP. Been going through a bit of a rough patch lately with the Royal Commission and everything. ANZ Bank. So you get the general idea about what Spaceship is about. So if you go up here, you can see a map, different countries they invest in. As you can see, most of it's in the US, Australia, a bit in China. There's also Japan, India, South Africa, a few European countries there. So as you can see, it's a lot more specialized than what Raise is. So I find Spaceship's model a bit more interesting because they actually revalue these companies and they've decided that these companies are exciting companies for the future. Alright guys, so there you have it. They're the two apps that I've looked at. I hope that if you're thinking about using one of these, you've got a clearer idea of what they're like. One more thing I wanted to do before we go is just have a look at if you invested $10,000. I know that's quite a lot, but just hypothetically, and we can see how much each app charges. So if I had $10,000 in Raise, it would cost me $27.50 a year. Now, if I had $10,000 with Spaceship, if I had it in their index portfolio, it would cost me $2.50 a year. And if I had it in the Universe portfolio, it would cost me $5 a year. So obviously that's quite a lot cheaper than Raise. But as you can see, $10,000 and $27 a year really isn't a lot of money in the long run. So that's something to keep in mind if you're thinking about these two apps. Alright guys, thanks for watching. If you like this video, hit the like button, hit the subscribe button. I'll be back with some more videos soon, but for now, good night.